Welcome to Stock Charts Trading. Today, just want to kind of show you where we are in the market. And so first, I just kind of want to do a little quick teaching on Elliott Wave and ABC pattern, because basically that's all the market is you're either in an Elliott Wave or an ABC pattern, and there's no other thing to consider. If you say, well, what about a harmonic? What about a head and shoulders? What about a double top? All of that falls into either the Elliott Wave or the ABCD pattern. So first on the Elliott Wave, you have a leg one, and that comes off of the highs up here, and then you would have lower lows, or maybe equal lows based on back here what price was doing. So you would have at least an equal or lower low, and then price goes counter trend back up, making a lower high, because you would have a high up here. Now you have a lower high, and so then price would fall with leg one, the impulse leg, and leg three is longer than leg one. Once you get down to leg four, you have a little pullback right here, back up, and then into leg five for the completion of the Elliott Wave. Sometimes to get the leg three longer than leg one, you'll have a little ABCD pattern right in here, consolidation, and then it will complete down to the end of leg three. And most of the time, these are about equal amounts. So right here, you might have an equal amount from the high to the low, then you have an equal amount from the high into this consolidation, then you have an equal amount down into this support level, and then you have the same equal amount down into this number five range boxes. And it happens over and over where you see these impulse legs hit that exact range and then consolidate. On an ABCD leg, the first leg of A will be longer, more like an impulse wave than what your four leg or your two legs were. You see, this is very small, consolidated, and then you have a big move out of that, usually back to the old highs or lows, depending on which direction this is going. And that would be considered a neckline on a head and shoulders pattern. But for right now, we're looking at the B comes next. You have a little pullback, and then your C leg is the exact same size as your A to B leg. And now here's where the consideration comes in. If it is the exact same size as your A to B leg, the first leg right here, then you know you have an ABCD pattern. If price goes higher and does not stop at that resistance line, which is made from the A leg, duplicating it up for the C leg, then what do you have? You have this back here. You have a three leg going in. And that's how you kind of can consider the difference between an ABC pattern or an Elliott Wave pattern. Now, like I said before, there's only two patterns. It's either the Elliott Wave or the ABC pattern. But what happens is you have patterns with inside the patterns, right? So this impulse leg comes down, it pulls back up, kind of creating a head and shoulders pattern. See that? Here's the left shoulder, here's the head. Now we're going back to the neckline and creating the right side of the shoulder here, and we get this breakout, and it is crossing over this neckline, right? Boom, there. And what do we have? We have an head and shoulders inside an Elliott Wave ABC pattern reversal. But the thing that created this head and shoulders was the Elliott Wave. But what created this head and shoulders was the Elliott Wave pattern, coming from the highs down to the lows, bouncing at support, going back up. This pattern created head and shoulders. Here's another chart going up. We have leg one, and then you have the pullback. And you can see in this leg one is usually an Elliott Wave with inside the impulse wave. And then the consolidation is the pullback. And what do you have? You have an ABC pattern within that. And then you go from the lows up to the highs, leg three, an impulse wave, which is an Elliott Wave, because an Elliott Wave is going to be longer than a consolidation ABC pattern. And then you have the ABC pattern for leg four, pull back. And then what do you have? The impulse leg up into the highs, which is the completion of the pattern, which is an Elliott Wave. Then you go from Elliott Wave, back into Elliott Wave, and that is leg A. And then you have leg C, which is a pullback, a counter trend from a downtrend, which is an ABCD pattern. And then of course you have the completion of that ABC pattern with another Elliott wave. And that's why you can make range boxes out of this, because Elliott waves consistently follow the same price when they are making these range of motions. Now for me, I used to try to catch every trade. So I would take trade down, and then I would take the trade back up trying to catch this counter trend trade. And then I would take the trade back down trying to catch this longer trend. And then I would try to take the trade back up trying to catch this. And that's where the frustration was, because I didn't know how far this was going to come up, right? Was it going to be a 30 fib? Was it going to be a 50 fib? Was it going to be a 60 fib? Was it going to be a 70 fib? And so that was my problem, is this counter trade destroyed my portfolio because I was so inconsistent with it. Because with an ABCD pattern, you could measure it, and it was just so confusing. So what I do now is I only take the impulse legs. I take leg 1, I take leg 3. Sometimes I don't even take leg 5. I'm looking for leg 5 to get into leg A, and then also maybe leg C. And what happens after leg C is then it goes down, which makes back leg 1. All right, so here we go. We're on DIA. We have a typical chart. We have a down channel. Where am I looking to get in long? I'm looking for a leg 1. So we have to have a low. Once we have a low, then we can start making higher highs. And so what do? We break out of this channel right here and start going upward. And that is our leg 1 entry. And here is our exit target after leg 1 into leg 2. We take a breather, we take a break, we look at the market and consider what is the next step. One thing that we have right here is we have an cup and handle, right? We have a cup down, we have a handle back. So we have this huge consolidation right here. We know we're going into leg 3, which leg 3 is always bigger than leg 1. And so we duplicate that up, boom, and there's our next target into leg 4. We have consolidation. And this is why I don't usually take the trade from 4 into 5, is because I want to wait and see how far 5 is going to go. 5 is usually not as long as the 1 leg nor the 3 leg. It's much smaller in size, and so it's a little bit harder to anticipate where's it going to go. So I usually wait for leg 5 to make a divergence, showing me that it's turning, making a head and shoulder. As you can see right here, you have a shoulder, you have a head right here, and then you have another shoulder right here falling off. And then what does price do? This is the leg I want to get into to the downside. And so there's my A leg. Now what? You have a counter trend pullback into a B leg. And so what should we consider? We consider the exact duplication of this from highs to lows, and that would put us in a down impulse leg for leg C. Once we come back into this range, and I don't know exactly where it could go, maybe it could come right into this gap fill, maybe it could come right here. But again, I use this leg 1 as a duplication to see where I'm going to go. If price falls farther than where this first leg A is, then I know we're in an Elliott wave to the downside, right? So then what would we have? We'd have probably a pullback, and then we would have a continuation for a leg 5 down a little bit further. Maybe this will help a little bit more. You can see this channel right here we have going upward. Within this channel, we come off of the base, and boom, that is support. We hit the resistance right there, and we come back down to support, and then we hit resistance up here, and we come back and hit support, and off of support, we keep going up, and then we hit resistance in our head of leg 5. Now we're clearly broke out of this channel. What did we do? We came back up into this range right in here, which is a gap fill. So again, looking off the 2 patterns that you trade, and they only have two patterns, Elliott Wave or ABCD pattern, what should we be anticipating? More downward selling into this range. Okay, so what do we have right here? We have an uptrend. We're using the LRC, so we have an uptrend. We have a low, we have a higher low, we have a higher low, we have a higher low, and then we have a lower low. Now, we are in an up channel, but my consideration is we have a high here. And so now we have a lower high and we have a lower high. So if price cannot break through this resistance support level, then what is going to happen? And we should probably come back down into this channel right here, at least at the bare minimum, and probably complete the ABC pattern. And I know I'm being so redundant about it, but I just need to get it into your mind what you see and how you see it. Because here's the thing about the market. Do you also see a cup and handle, an inverted cup and handle, right? So you have the rim of the cup, the base of the cup, now back to the rim of the cup, and you have a handle right here. What does that show us? It also shows us that basically you duplicate from the highs down to the lows, and you should get to this train range box, and here you go for the target to come into this lower support level. How can you also look at this? Well, is it not a head and shoulders pattern? Right here you have the head, and then you have a shoulder, and you have a lower shoulder. And that's where I say it's confusing and hard for me, right? Because if you say, well, I'm going to just draw this line across from shoulder to shoulder, and I'm going to get in somewhere against this resistance. I'm going to get in and it's going to go down. But the problem is, back to the Fibonacci, where you have, right, you have a 50 line, and then you have a 60 line, and you have a 70 line, or you have a double top. So price can keep on moving upward, even though you feel like this is a head and shoulders pattern. I just showed a video a couple of weeks ago where I talked about, I thought it was a head and shoulder pattern, and then it went into a double top. I did a video a couple of weeks ago where I was showing that I entered into the trade on a head and shoulders pattern, and then price kept going up and it went into this double top resistance. And then price kept on going and it went in and made a new head and shoulders pattern before selling off. And fortunately, I had enough time on it that it was okay because it was a stock. So I added my position. But if I was in an option, this I would have lost, and I would have lost royally on it. And so that's why it's important to me. What are the patterns you're trading and how are you trading them? Because right here, you have the opportunity to take this to the downside as a head and shoulders pattern. Or you can wait and be patient and find that you hit a double top and take the trade here. Or you can be extremely patient and take the trade all the way up here as a new head and shoulders pattern, using this over here as the shoulder, this as the head, looking for a new shoulder, taking this down. And that's what I'm trying to say. Like, where are you entering into these trades? And I want you to be mindful of the Elliott Wave and then also the ABC pattern. Because what do we have right now? We broke the channel. We're in an ABC pattern, but not all the market shows the same thing. And you could say, well, I have to take this because it's a head and shoulders and I got to trade it right now. And what my thought is let's look at more things in the market and see, what if you only took the absolute best of the best, which one of these three right here is the best of the best in this trade? And I would have to say, if I had my choice, I would want to take here an extreme outside position rather than have the possibility of this thing go against me up into the double top or up into a new head and shoulders. And so for me, before you jump into the market just off of a pattern because you watch a YouTube video, look at the whole market and say, what is the best for me that gives the best results? All right, here we are on GS. We have a head, we have a shoulder, we have another shoulder. And what do we have right along here is we have a neckline. So could we take this trade? Is this the perfect setup? Yes, it is. Let's look at another chart. Here's IBM, you have a head, you have a shoulder, you have another shoulder. Could you take this trade to the downside based on what you see right now? Head and shoulders pattern, definitely. You could either take your profits right here at this support level or duplicate this all the way down, which will probably give you a lower range of in here. Let's take another look at another chart. All right, here we are on McDonald's. You see that we have a trend line. We broke that trend line. We have a head. We have a shoulder over here. We have another shoulder over here. Can we take this trade to the downside? Head and shoulders pattern to the downside, absolutely. And at this exact time that McDonald's is making a head and shoulder pattern, let's look at another trade that the market is also showing us. All right, here we are on CarMax, KMX, and you see that we have an upward channel, impulse wave. We have a high over here, and we are coming into another high, double top. Should we expect a sell-off at that double top? Possibly, because why? We are underneath this resistance right here. And so we know price will probably come up into there. Here we have resistance also coming across here. So what happens at resistance? Price sells off. And so we probably will sell from this point up here. At the same exact time that the market is giving us head and shoulders, we're now seeing double tops. All right, here we are on BABA, B-A-B-A. And what do we have? We have this resistance line that's broke right here. So what do we have? We broke the support. So now we're underneath this support, which is new resistance. We also have a resistance level right here. We're making a double top. Where should we go? We should come down into this support level, at least right here, off of this double top. All right, again, we're at KLAC. And what do we have? We have resistance. We have a double top. And so what should we expect? Market to come back down into these lower levels and support area before bouncing off and going back up. And so now I showed you a little bit better place maybe of having a resistance level, but at the exact same time and date of head and shoulders patterns, there's also double tops. And now I want to show you right now what other positions are there. There are heads of head and shoulder patterns happening right now in the market. Okay, so right here we have a shoulder. Why is it a shoulder? Because we have a head right here that is higher than the shoulder. And then what can we do? We can draw this diagonal resistance line. We have resistance right here. 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 And what should we expect for the market to do? Well, if this is a true head and shoulders, it should come down at least into this neckline right here, right? Because then price will bounce back off, making a leg right here down into this support. The B leg would come back up into this resistance right here before completing the ABC pattern downward. And that's what I'm trying to say. Out of all of the pictures I just shown you, look at the move to the downside, because this is buying it at the peak. And what do you have? You have huge confirmation of 4 very strong resistance places where price has fallen off before. All right, here we are on BIDU. You have resistance, you have resistance, you have a shoulder right here, you have a head right up here into that resistance. What should we anticipate happen? Your price should come down back into the support level all the way around this 110 range. Holy moly, that's a huge move off of this 128 level. Then what will you happen? Well, price will go back up, making a B of an ABC pattern. What will happen then? Well, you would be under this resistance line of this shoulder. You would hit that shoulder, making a new position to the downside, and then you would go even lower than this 120 down into this 110 or lower. All right, here we are on Square. We have a shoulder, we have a head, we have not a shoulder, but basically where we know resistance will come into. So price should come down into this neckline right here, and that will be our support. Once we hit into that neckline support area, then price will come back up, making the B leg, which is not a very big leg, even though it will come into this support resistance area right here before falling off, making the duplicate pattern of the A leg downward into this $80 range. All right, here we have resistance, 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 resistance. This is the head of this, and then we'd come down. Here would be the shoulder. We would have a neckline somewhere in this support area. So what do we anticipate? That price would come down into the support area, come back up into this 155, which would then hit another resistance area for this shoulder, making a new shoulder right here. And then price would fall off after that. And so that's what I'm trying to say. You could be in the left side of a shoulder right now. There's plenty of trades out there which take you into an impulse leg, leg 3, which is a very good long down leg. Or you can find a double top where you have resistance, resistance, you're coming off that double top. Where should you go? You should come back down to this support level right here. And so that would be your target. If you broke the support level, you would duplicate that and that would be your target. Or you could take a trade like DOCU where you have this tight range impulse leg up. You can see that you're right against the resistance on the channel. If you look and see what happened last time, it was in an upward impulse channel right up against the resistance. You had this pull back down. This pull back down was from 150 to 130, a $15 move. So just if you got this little consolidation back, you would make at least $15 off this 65, which would bring you down to this $150 level. Or you can make two trades using this head down to this neckline, get into that trade, make the profits, get out, wait for you to come back up into resistance right here off of this other shoulder and get into the trade and take it down to here, making more profits. And that's what I'm trying to say is consider where you're entering. In the market right now, there are 3 entry points. 1, a shoulder. 2, a double top. 3, a head. Where are you going to make the most money? Where do you have the most protection? Where do you have the most confirmation that this is a great entry point? And that's what I want you to consider before making your next trade. Where are you entering? Until next time.